Inflation surpassing Wall Street as it rises more than expected, seeing the largest monthly headline increase since August 2023. Fed Chair Jerome Powell saying in an appearance before House lawmakers that we're close, but not there on inflation. Markets now seeing the pace of Fed rate cuts slowing down in 2025. For more on the ripple effects, let's get to Interactive Brokers senior economist José Torres. José, great to see you as always.
Great
so that CPI print, it does top forecasts. Did it top your forecast, José?
Absolutely.
Were you surprised by what you saw?
It was a crazy surprise. It was ridiculous. 0.5% month over month, folks, that annualizes to 6%. Of course, just 1 month. But the first month of the new administration coming in, what a way to get started, right? You have also inflationary risk going forward on the tariff front. Could goods begin to reinflate? We saw used automobiles lead the way, right? Are folks front running the possibility that tariffs and restrictions later can increase those prices? Is that filtering into expectations, right? Then also on the immigration front, we saw in the jobs report, wage pressures really lofty. We're probably going to see certainly going to see labor force growth decelerate with the immigration restrictions. So we have some pressure there to the upside on wages. However, that could be countered by shelter. Right? With the immigration restriction, we could have an incremental increase in the vacancy rate that can soften rents, soften home price appreciation. So, those are some countering effects. Also, drill, baby, drill, higher oil production. Maybe we get West Texas Intermediate in the 60s, maybe the high 50s. Those are some countering effects in terms of what can go right. But right now, the economy is really strong. Consumer spending is buoyant. Labor markets are tight. Subdued unemployment, rising paycheck growth. So it's not an environment that's necessarily conducive for lower inflation.
I want to ask about something that we've all been talking about a lot, and that's egg inflation. And I know that this is not part of what the Fed looks at. I know it's because of avian flu, but Michael McDonough over at Bloomberg put together what he calls the bacon, egg, and cheese plus coffee index. And now if you prepare this meal, this breakfast for yourself at home, on average it costs you $3.03, which is a big increase even month over month and year over year. And again, even though it doesn't go into the Fed's calculation, how do everyday things like this affect inflation expectations, which can feed into core inflation, right? I mean, is that how we should think about it?
Partially, and really weighs on consumer sentiment. We've been seeing those confidence numbers begin to get depressed. Folks, they have sticker shock. They go to the store and they can't believe that a carton of 12 eggs costs $12, $1 an egg in some cases.
Yes, an anecdotal report from here in the Yahoo Finance newsroom. In fact, $12 for
yes,
a carton of
I mean,
eggs.
I even heard folks, Julie, Josh, I heard folks out there talking about how can we start laying eggs so we can benefit ourselves, right? Because they're so expensive. But, all jokes aside and keeping it more serious, they absolutely do filter into expectations of the consumer, and then that also works themselves into businesses. Now, one important fact, September last year, the Fed rushed that 50 basis point cut, right? That essentially pigeonholed them to, you can't go from a 50 basis point cut to then not cutting the next meeting.
Was that a mistake, José?
It was absolutely a mistake. Then they had to go a quarter point in November, a quarter point in December, because how can you cut 50 and the next meeting go down to 0, right? So that was pivotal. Can you believe, is it a coincidence that CPI bottomed that same month in September at 2.4%? Now we're at 3%. I expect economic growth to accelerate, driven by trade acquiescence, lighter taxation, milder regulatory regime, and a manufacturing onshoring push, right? So all those things happening, can inflation really come down? I think inflation stays right around 3%. There's a risk though, folks, Julie, Josh, if inflation moves up to 3.5%, what Jennifer was talking about earlier, the Fed may have to turn around and start hiking.
What's the chances of that? Is that if you were to look at it, if you were to gauge the chances, the probabilities that actually it's a hike in 2025, what would you put that at?
Josh, it's not that low. Right now, I'm going to say 25%.
Wow.
25% chance. All right, let's talk about some of the other inputs. Some of them you mentioned, but you talked about tariffs as being a potential pressure here. We've been watching the auto industry very closely here. So if you looked at things like motor vehicle maintenance and repair in the CPI report, you looked at, new vehicle prices actually came down a little bit month over month, but used vehicles still rising. How worried are you about that particular area and the tariff effect?
I'm hoping that the tariffs are more of a negotiation tactic, right? Trying to get some political wins, trying to gather the allies.
But sorry to push back on that, but with Mexico and Canada, fine, that's already been delayed. But it seems like the steel and aluminum ones are not necessarily negotiating tactics. What about this view that some of them are not negotiating tactics? They're just economic tariffs put in place for various reasons, for either competitive advantage in the U.S. or to get revenue to offset a tax cut.
Well, in that assumption, if a lot of those tariffs remain, those 25% tariffs, then those are inflationary. Those are inherently inflationary. And that 3.5% CPI case that would lead to that hike does open up significantly. So if you believe that we're going to maintain high degree of tariffs for the medium term, call it 3 months or more, then absolutely those are inflationary. President Trump has spoken about short-term pain necessary to achieve economic wins in the medium and long term. Bring some more of those manufacturing jobs. We used to have roughly 20 million. Today we have around 11 million. Maybe we get 3 or 4 million of those back, right, over time. So he has spoken about, taking the short-term pain for the medium-term gain. I'm hoping this is more of a strategy to keep the Western Bloc and the allies together, to remain vigilant. It's not a bullying tactic. It's more of a vigilance tactic so that our allies don't get closer to China, because that has been happening in the last 10 or 20 years. A lot of our allies have been getting closer to Beijing, have been getting closer to Moscow. So, how do we keep them closer to Washington?
Jose, let me ask you about the labor market, because you got a big headline today that got some attention. It was Chevron cutting up to 20% of its workforce. When you see that headline, as an economist, Jose, do you write that off and say, okay, that's one company, it's one story, it's one anecdote, I can put that to the side, or does that suggest some broader trend to you?
Josh, there's some cracks in the labor market. With Chevron, the price of oil came down significantly, so it makes sense. Their margins are compressed a little bit. Oil was at $120 in 2022. Today it's at $72 or so. If you look at the last jobs report, the average weekly hours in a work week went down to 34.1. That's the lowest since March of 2020, the depths of the pandemic. Before that, you have to go back to 2010. That's a leading indicator. Why? Because employers begin to trim hours a lot of times before they lay people off. What else correlates with that? Leisure and hospitality employment actually lost jobs. Big discretionary sector, big sector where bartenders, waitresses, bussers have their hours trimmed rather than them being laid off. It's a big part-time culture in that industry. So I'm worried about that. Also, the breadth in the jobs report, very weak. Many sectors only added between 1,000 and 7,000 jobs. So we had a lot of concentration in just a few sectors, right? Of course, health services, education, government, those have been the consistent gainers. And payroll growth is going to slow down because you don't have that immigration impulse. There's no doubt that the strong number of entrants during the Biden administration from 21 to 25 led to higher payroll growth and economic growth. Most of those folks, when they come here, for the most part, economic prosperity via the labor market.
Jose, thanks for coming in. Always enjoy your visits. Appreciate it.